Good evening, traders. Let's jump into the market review today and our trading account and see what's going on. Pretty good down day in the market. So we continue to see on a weekly basis a pretty strong down move this week, coupled with the last 2 weeks of down moves. On the daily, we talked about in the last video, we had this downtrending channel. We're actually trying to break out from the bottom of this particular channel today. So my caution was, if we rally, which we were doing early on in the session, if we rally, I would use any rally as an opportunity to get a little bit shorter here in this market. We did rally and then we sold off. We closed closer to the lows of the day, but off the lows of the day. However, we are at now the 3 ATR move and breaking down through here, but we are in no man's land on SPY. We've broken the 21 EMA. We've broken through the 50 EMA. We're now heading down into really a no man's land where there's not a lot of really good levels to watch. So we're going to keep an eye on this 431 level. I think one area you can potentially watch, and again, I'm not a huge fan of fib levels, but if we draw some Fibonacci levels on here, and I'm actually going to modify this a bit. So if we take a look at this Fibonacci, I'm going to add the 382, which is not one that I put a lot of stock in. But if we look at the this recent up move that we are in, the 38.2 is down around 430, and then you've got the 50 around 420, and inside of there is this previous pivot point around 432. So this is where I'm looking, potentially to see the next area, and if whether that holds or not is going to be somewhere around this 432, which 432 from 436 or so, not a gigantic leap or so. Another day like today and we can get there pretty quickly. So it's another 1% down from here. So not that this can't hit tomorrow, but this is what I'll be looking for tomorrow. So a nice down day in SPY, 3.38 down 0.77% in SPY. So the SPX is same again, down $34, which is not the worst of the day, but close to it. And again, 0.77%. Let's take a look at the Qs and see if there's anything happening in the Qs that's any different than SPY. And really on the weekly, there's not. We still broke down through this tightening triangle a little bit more. Now, we did hit upon this support level on the Qs around 357. We did hit that. We bounced just fractionally off of that. Now we are getting oversold on RSI, but MACD is still pretty strong on the down move. And on SPY, same thing. We are now oversold on the RSI, but we're just entering oversold. So there's nothing positive that would say, hey, let's throw on some longs here. Now, again, I think we can bounce, but I think any bounce up, if that bounce up does not sustain and turns back over, that would be the right shoulder of a head and shoulders here on the daily, with the neckline being right in here where we are. So, which is about 5% off of our highs. So a head and shoulders is very possible with another 5% after that. We'll see where that puts us, but that's going to probably put us somewhere around the 618, around 4111. 4,100 on S&P, and on the SPY on about 411. So that's what I'm looking for, but a lot of things can happen between now and then. It's not a given that we create that right shoulder. It's not a given that we don't just go higher. It doesn't mean we can't just keep going lower, but things don't typically always move in one line without a little bit of a break, as you've seen in the past here. We usually move up, get some consolidation, another move. We just haven't gotten really a whole lot of consolidation. It's just been a little bit of a meltdown. So the Qs look the same, and then IWM today, a pretty good down day again. So 2 to really 3 down days, pretty hefty in a row. So some big hits happening here on IWM as this thing heads down towards its 200-day moving average. It is the only average. Qs are well above their 200. SPY is well above its 200. IWM is not. It's almost right at the 200 moving average, so we don't have much to go to test that. You are at a 3 ATR move. Doesn't mean we can't go further than that. We've seen before that we can go even lower once we hit that 3 ATR move. So it doesn't mean we're coming back inside the trend, but it does typically have a little bit of a slowdown in there. But we've seen it on IWM before. Weekly looks terrible. The daily is now oversold. MACD is heading lower. Doesn't look great for IWM. Nothing there to look at. VIX popped up again today, so 3 pretty good VIX days in a row, hitting the top of the Bollinger Band as MACD and RSI move higher. So VIX, a pretty good update, up almost 7% on the day today. So the VIX has moved from about 15 to 18 in 2 days, so 3 points up on the VIX. But VIX is still not at a crazy level. So that's not really a positive for this market, thinking that we've already dropped 5% and the VIX is still at 18. Volatility, while rising, is really not anywhere scary yet, which is kind of a scary thought, that if we see significant volatility and we've already dropped 5%, what would happen on a significant volatility move? So volatility is still relatively low, although increasing. The dollar on the day today did move higher on the day. Towards the end, gave back a little bit on the dollar. And that's really, again, what I've said in the last couple sessions. The dollar is what I'm watching. That's affecting bonds. It's affecting forex. It's affecting the stock market. So dollar is where we want to keep an eye on things. And it's right here at a downtrend and a previous resistance level. So it's a lot, and we're right at the 200 moving average as well. So there's a lot of junk right in here. Probably even hard to even see what's going on. There's a lot of resistance stuff in here for the dollar to have to break through. We'll see what continues. On the weekly, dollar still looks pretty strong. It could keep moving higher. On the daily, potentially running a little bit out of steam and getting a little bit over its skis, but we'll see. We'll see. We do need that dollar to chill out a bit. At least a pullback or some sideways consolidation. And then TLT gap down, finished a little off its lows, but still off on the day. So TLT bonds just dropping further. We're getting very close to this previous support level here on the weekly. And, I'm still not ready. So still not ready on TMF or TLT. I like them here. I think you could potentially dip your toes in, but I think I'm going to wait. I don't want to be the first one into a trade that may reverse the other way. I want to see some movement to the upside. I don't see any firming of the technical underlyings on TLT to indicate that this thing's going higher tomorrow. So be very, very cautious on it. All right, so Aussie dollar dropped again today. British pound did raise today. So the British pound, of all of the forex here, looks the best. It looks pretty decent. It fought with its 50 and 21 EMAs today. So British pound looking decent. It's the one of the 3 that I watched that's doing decently. Here's the euro. It's not looking too hot either. So the euro and the Aussie dollar, weakest. British pound looking halfway decent in here. I think it's looking halfway decent, and I think it's worthy of a strangle opportunity. Oil rose today, so we got a little bit of a bounce in oil, tried to regain its 21 EMA. Still downside on the MACD and the RSI, dipping below 50 here. The weekly looks like maybe a little steam's running out of oil. I don't expect a giant pullback, but we've already had a pretty decent pullback from this high around 85 to 80 here today. So we've already dropped 5 points on out of 80s on an $80 stock. So not a 10%, but more of a 7%-ish move, 6-7% move down. I like oil here. I think this is a really good opportunity. I have a lot of things working on oil. So we had a put debit spread left over from a 112 on oil today, expiring. I've got another 112 on oil, up 80% in 34 days. I've got another 112 up 13% in 17 days. And then I've got a strangle on oil, which is down about 15% in just 7 days. So got a bunch of trades on oil. I like it in here. Like trading oil. Gold, on the other hand, still not looking too hot. We had this triangle that we broke to the downside. So it's really pretty much gone. Now on that triangle, we're going to be looking at any areas where potential support could come in. This is the previous low over here, which is around the 1903 mark, something like that, 1901. So 1900 on gold is the next area. We are above the 200, but that's also very close to the 200 MA. The 21 crossed the 50, as I pointed out the other, a couple sessions ago. So we are pretty ugly looking on gold. It's mirroring the market, and it's showing no rotation into gold from the market. So as the market's selling, they're not rotating into gold here, maybe rotating a bit into the US dollar, which is keeping that elevated. So we'll keep an eye on that. If we look at our sectors over here, just a quick sector watch on here. Two sectors are up today, XLE and oil, both of them up nicely. Again, that's why I have 112s on oil. I really am pretty bullish on oil, even though this thing is pulled back. Nice update today. I really like where energy and oil are. So I think energy here, as we look at this bunch of spaghetti that's up on here, it is rolling over on the daily, but the RSI has no decided what direction it wants to go, but it's rolling over with the MACD. So some steam is coming out of this move. Totally fine. We came down, didn't quite hit the 21, and then we rallied up higher again today. The 50 is getting close to breaking above the 200 on energy. So energy still looks good here. This pullback really healthy. Good defensive sector, good sector to be in. I think this is where I would start to pick some names if you want to get anything long in here right now. XLK down a bit, but not the worst. Again, not techs are down, and this thing's certainly heading down. There's no doubt about it. But it's getting overdone. But the larger techs and techs in general, they're down, but they didn't have as bad a down day as some of the other sectors had today. Now the XLY down pretty good. This is your Amazon and your Tesla. Tesla down another 3% today. Amazon down not quite 1%, about 0.8%. So they're keeping this thing lower. This little channel that we're in, we're starting to break the bottom of this, so it looks just like the SPY does. We'll see where we can stop. There's not a lot of support in this area here. Maybe this previous low. I don't like pegging previous lows as a support, but I don't see a whole lot of anything to the left here that would indicate an area that we want to stop. Maybe this weekly high around 158. So this will be something that we'll put up on here and keep an eye on. But I think this is the only area that's given me any indication of where this thing could slow down at. Financials also not looking too good. Breaking through the other day on this previous support level here. So the descending triangle, that thing is down. So financials continue to head lower here, expanding their move. And I think right now we are looking at this area here around 34 and change as potential support. Let's get a little bit longer. So it looks decent, but this is a support area potentially in here. Not a big strong one, but a support area. So we'll see if financials find any footing, but Financials, not only did they break the 21, then the 50, and now today they're breaking the 200. So financials, extraordinarily weak. This is taking down the Russell. So there's where the major sectors are in there. If we look at utilities, not down much today, just meandering a little bit sideways. We had this kind of support zone in here that we took out, so this really no longer a factor in here. There's really nothing below here. So a lot of these charts, there's not a lot below to peg something to as an area that we could stop. So you're really looking at technicals and momentum right here, as opposed to actual support and resistance levels. So there's not a lot in here. Maybe start to look at some of the fibs from some of the larger, older moves, but nothing great there. And then on the individual stocks, pretty ugly day, but there's a green one that stands out pretty well in here. So let's take a look at everything that we're currently watching. And what's green? Well, Google was green today. And I had been mentioning that this is the best looking chart of the bunch. It's still hanging above its 21. It bounced off it yesterday, and then it rose higher today. It had a bigger day and then sold off a bit. But Google still in a nice uptrend. It is the one tech stock, the one big name tech that is holding things up. And you've got a nice looking little triangle happening in here that we tried to break through today. It's tight, it's small, but we poked above it today. Let's see where we go on Google. If we get any kind of reversal tomorrow, Google would be one to watch. So if you're looking to peg into something, I think Google's one to keep an eye on. We take a look at NVIDIA. It was only down a little bit, so still not looking too bad on NVIDIA here. I still think a gap fill at some point is in the cards. But you got earnings coming up next week, so I wouldn't be touching this with a 10-foot pole. Meta, a pretty ugly day today, breaking through another level here. So now we're moving out to the next potential support. So it's just ticking the boxes of one support after another. MACD's heading lower solidly, with the MACD breaking below its zero line, and then RSI heading lower as well, and the weekly looks terrible, but it's so overextended. I don't know how you can't think that this thing was coming back to at least the 21 EMA on the weekly, if not the 50. So somewhere in this range of 230 to 260 is what I'm looking for. So I think in this range somewhere in here is really where we would want to keep an eye on. And there's a little bit of a pivot level right in here that we'll keep an eye on, somewhere around this 244 as an area to watch. So I'm not too positive on that. Tesla as well today just continues to move lower, hit some support here today. We'll see if this area holds at all, but otherwise Tesla definitely pulling back. It's one of the better pullback stories. It's breaking the 50 on the weekly. Okay, but this is good. This is if you want to see Tesla moving its way higher, it's got to move up, move down, move up, move down, and then hopefully you see another move higher. I think you're getting to an area now where you start to watch RSI and MACD to see, are we going to start to reverse? Bollinger Bands are not tightening yet, so we got to watch. We still have repair to do, but Tesla's one that's pulled back a lot more than many of the other ones have so far. Microsoft, you can put that one in that camp as well on Microsoft. So a couple of these, I think getting to some areas that makes them really interesting, and even Apple getting to an area where it's pretty interesting right now. We'll see what happens. Definitely oversold on several of these particular names. Anything else green was you had some of the drug companies, J&J, Abbott, Pfizer, all moving higher, and then CAT on the utility side, and then you had several energy names, Devon Energy, Oxy, Pioneer, as well as Alibaba had an update today as well. So some interesting consolidation happening here. I'm not touching it yet, I don't think there's a point to do anything with. You've got the Bollinger Bands opening up, so there's still a lot of volatility left in BABA. But when you're looking at Oxy, you got Bollinger Bands tightening up. This thing is consolidating here. Could be ready for another move, as well as Devon Energy. This one's consolidating a bit down here. Not to the extent yet of Oxy. So there's where those are. Let's get into the account. Nothing exciting to share really in the account today. Delta continues to climb. It's at 0.32, which is a lot higher than I want to be at on my Delta. This is the struggle right now, is getting that Delta to, down. I had some hedges on. That's not really helping because the overall portfolio is still moving up. We've got a lot of positive, we don't have a lot, but we have a decent amount of positive delta that is too much for me. So we're going to keep an eye on that. Theta, good Theta, 830. So excellent on Theta, 0.3%. Net lick drop today. BPU pumped up a bit on the volatility. 58%. It's a little higher than we want to be at. And we knocked out $78 in gains today. Wow. So up $5,000 on the month, 1.7%. So even though the market's been dropping, and you're watching the market drop 1, 2, 3 days, 3 weeks in there, we are still generating daily and weekly income, which is exactly what this is for. I don't care about the net lick. Okay, I don't make any money on net lick going up and down. I make money when I'm closing trades, and we continue to close some winning trades. So taking a look at what we closed today, is we had a put fly. I used it as a hedge on QQQ. We had a 111% winner on this, which was a 56% return on capital. We opened it for 70-cent debit, closed it today for $1.48 credit. 6 days in this trade, only $78, nothing major. Didn't throw a whole lot of money at this thing. Just wanted to have something on that was easy to move around. So there's where you are in the portfolio today. So overall, decent day. We'll take it. In the account itself, we've got to get the delta down a bit. We'll watch and see what happens tomorrow. Everything's in this bearish mode right now. We're closing near our lows of the day. Bulls are not in control. They were not able to move this thing higher. Bears are definitely in control. Let's watch and see what happens here. And we're just going to keep trading our plan. Our 112s, traps could be looking juicy, but we got a long way to go to get into some of those traps. We've got most of the traps start around 4,200, 4,300 and change. So we have to get down about another 200 points to start to enter the trap, but we don't have to actually be in it. We just need to get close to it, and things could start to look good for us on getting not only the put debit spreads expiring, which are way down at 3,300, 3,500, 3,600. We still have 800 points to go before we get to those. But those put debit spreads, if as long as we don't get there tomorrow, we'll be in good shape. All right, guys, have a great rest of your evening. We'll talk to you later. Good luck in trading. Bye-bye.